Okay. Let's see. This split screen thing has changed my life. I know I'm always shitting on technology, but when it does work, I'm a happy guy. All right. I just found out about this last stream where I accidentally layered two windows on top of each other, and I can do this split screen thing. And this is really what pissed me off. Actually, I had a convo with somebody on the team about this. You all have MacBooks. Everybody here has got a MacBook, most of y'all. You all have been watching me and trying to like minimize my screen and put it in the corner here for about 2 years. And most of you guys knew about the split screen feature. Now I'm trying to sit here and understand why you wouldn't say anything. Can somebody explain to me why would somebody know this information and choose not to share it? What the fuck? All right. This is probably a weird way for some folks to be experiencing this live stream. At least you guys are getting an honest take. Welcome back to the #1 live stream for traders. We'll be covering everything from market news, data releases for the week that you guys could watch for, some trade ideas that I'm watching personally, and of course, we'll do a full market outlook. Now, tariffs are the #1 priority for market news and kind of the top of mind for everyone. This is very unpredictable because unlike interest rates, GDP reports, inflation, recessions, and interest rate policies, there really isn't a great playbook or blueprint for what happens when you're going to reshift an entire country's trade balances, especially when it's the #1 trading partner for the entire world, i.e., America. So this is going to be very interesting for us to navigate, but luckily, unlike the last administration, we actually have people at the helm communicating. So we get an inside peek about how they think about this entire game, how they think about the ramifications of these tariffs, and then how these tariffs can impact markets and the average economy for people. And so we'll be covering those all the way through. Okay. What's up, everybody? What's up? What's up? I just want to do two quick reminders. If you guys have graduated the masterclass, a lot of you guys on YouTube watching this, just know that you can get back into the group chats without having to go back through the masterclass. So if you guys want to get into the VIP group chats, you guys want to become a VIP member, make sure to hop on over, reach out to us, info@chartaddictsfx.com, info@chartaddictsfx.com, and reserve your seat because everybody else cannot join the VIP group chat, the folks on Zoom, to do all of these great market outlooks and kind of the members only stuff that we'll be adding. But you can. So don't miss out. Make sure to reach out to us. And if you guys want to get back into the masterclass, you guys want to come back for round 2, of course, previous members, 50% off. Reach out to us for the code as well, or just check your email. Okay. So I have a few good videos lined up for you guys here where we're going to hear directly from the Treasury Secretary, Scott Bessent, which I've had my opinion about. You guys remember the whole video I made about him being George Soros' #3? George Soros is #3 guy who used to run the Soros Fund. Scott Bessent is now our Treasury Secretary. And if he wasn't like kind of like a fuck, if he wasn't kind of like a retard savant, I'd be very concerned. But if there's anybody that you need, it's like break glass in case of a sinking ship as a country, Scott Bessent might be on the list. So not too upset about this pick. And you guys will hear a little bit about his perspective on tariffs. I think that we got the right people here in charge. Now we have the Commerce Secretary. Oh, if I can find it. Commerce Secretary Howard Lutnick describing his perspective on tariffs. The big 4 questions that every reporter is asking in every single one of these interviews is, are we going to go into a recession? Do these tariffs cause inflation? Will prices go up? How will this impact the greater economy? And of course, a lot of countries have threatened retaliatory tariffs, and what's the impact on other countries retaliating? So instead of just trying to go through these pundits and trying to figure out kind of what the zeitgeist is, let's just hear it directly from the Commerce Secretary, the Treasury Secretary, and from probably some of the largest capital allocators. I've stopped watching this show as much since David Sachs left, okay, because now he's the crypto czar at the White House. But occasionally, when there's some topics that are important, I still watch the All In podcast. If the All In podcast is watching this, bring David back for fuck's sake. because this show is almost unbearable to watch without him. And stop bullying Friedberg, okay? Just side note in case somebody hears this. They had Ben Shapiro on. They're discussing tariffs. If you guys don't know about this podcast, it's three, maybe four capital allocators. These guys are some of the largest venture capital investors in all of Silicon Valley. They're connected with literally the largest CEOs in the world, from Uber to Netflix to WeWork to literally, they've had Trump on their podcast. They've had literally everybody. Like I'm astonished that people like this made a podcast and are able to get the information out to us. So I don't like Ben Shapiro in any fucking way, shape, or form at all. The guy's annoying as fuck. He hasn't made a good point in like 4 years. Maybe four. But he did make a pretty decent point about these tariffs. We'll kind of hear from these capital allocators what their thoughts are because they play a different game than we do. For example, if you're in the same room as Elon and Jeff Bezos and let's say Bill Gates, you're not actually physically in the room with them, but you're kind of around their advisors, you're around people who manage money for them, you're around people who advise them. And they're saying that Elon and Jeff and them are going to start to sell some of their stocks because they believe it's the high of the market. So then the next layer of capital allocators, they begin selling. These are the largest venture funds, let's say in Silicon Valley. You have Sequoia, you have Andreessen Horowitz, you have some of the largest venture funds. And then you have the tertiary funds, which are multi-billion dollar funds. You have like Chamath, you have Craft Ventures with David Sachs and some of the folks that are on this podcast. They're what I would call layer three, where it's multi-billions of dollars, don't get me wrong, but they're not the largest capital allocators in that game. You have BlackRock and then Fidelity and Schwab and State Street. Those are the largest equity capital allocators for the public markets. So you have like all pension funds and 401ks. They go through the private equity guys and the public equity guys. So those folks are the ones that move the markets. This is what I'm trying to kind of get at here. It's not about what's actually happening in the real economy. This is the biggest lie that's been told, is that if you watch economic indicators and you have your finger on the pulse about economic data, you can predict what happens next. That's so fucking stupid. All right? Try it. See when the next bad news event is, see when the next bad news comes out and see if the market crashes. No, literally might do the exact opposite most of the time. And so there's a sentiment that is more important. Right now, the sentiment across all capital allocators is risk off, meaning like if you didn't see this shit coming, if you didn't see these tariffs having a significant impact on the economy, that's a dereliction of duty. You're a fucking idiot as a capital allocator. People, I'm a guy that talks too loud on YouTube and is low-key hilarious and is probably the best NASDAQ trader on this side of the Mississippi. Even I figured this shit out. I knew that tariffs were going to cause some short-term pain. Remember, guys, remember I made the example, I said the boo-boo. Remember you have a boo-boo and you have the fucking Band-Aid? And everyone's like, well, don't touch the Band-Aid because you don't want to make the kid cry. And I was saying that Trump is here to rip off the Band-Aid and there's going to be a period of pain, but we have to get through it. Otherwise, the infection, the thing's going to get infected. We have to cut off the whole arm. We don't want to cut off the arm, people. We want to rip it off, and then we have to disinfect it with hydrogen peroxide, which hurts. This is the phase that we're in. Okay? So capital allocators have all moved their money to the sidelines, meaning they have sold off a lot of their stock. And then what we've seen from last week, kind of when the tariffs were announced, is a bit more like people were a lot more scared before the tariffs actually went into effect. Why? Because it doesn't matter what the fuck is happening. What matters is how do people feel? How do the capital allocators feel? So pre-tariffs, the capital allocator sentiment was fear because it was uncertainty. You didn't know if they were going to go into effect. Nobody knew the exact numbers that were going to be charged to these different countries. And because of that lack of clarity, uncertainty causes market panic. Now, on the flip side, now that these tariffs have actually gone into effect, that's not good. There's retaliation that's going to go into effect. There's going to be the supply chain disruptions that will cause short-term inflation. If we can't get soybeans or whatever the fuck we're importing, or if the soybeans now have a 25% tax, everything that has soybeans in it is going to get taxed 25%. The burritos will go up 25%. It's like everything will go up. And so even though that's disastrous right now, The market actually is having some relief because now there's some clarity. Now we know what to expect. Okay, so if there's anything you guys learn from these live streams, well, you should be learning a fuck ton because people, I'm giving out the game on here. But if there's anything to remember, it's that certainty in the markets is more important than the economic reality. People could be starving. There could be lines outside. Inflation could be at 20%. The worst things in the world, as long as capital allocators, like the largest capital allocators, have a framework of how to build out the next 6, 12, or 18 months of investing, typically there is a relief in the markets and markets are typically bullish. Okay? Unless that certainty is uncertainty. With this tariffs, the only thing that's certain right now is that we don't know what's going to happen. And that's where it makes sense for the markets to remain in this like risk off sentiment phase for a little bit longer. Does that make sense to everybody? Put a one in the chat if we're all on the same page. I kind of just wanted to do a quick breakdown of where we're at in terms of tariffs, but I'll let the experts go through and tell you themselves. Gap fill by hitting. Good evening, Roy and Chart Addicts. Good evening, Tony. Good to see you guys here on the live streams. Devaney, good to see you on here. Devaney. That's all I got. I was trying to find some joke, but like, I don't know. Maybe it's a Sunday thing. Put a one in the chat if we're good to go. He said on point about Scott Bessent. Yeah, guys, break glass in case of the shit hitting the fan. Do I trust them? Not as far as I can throw them. It's war trades. I'm guessing you mean it's a trade war. It's not. It's not a trade war until there's retaliation. Now, the one thing people have to realize is all of the tariffs that we're levying on these other countries are retaliatory in nature. Meaning they charged us 20%, so we're charging 20. How the fuck are they gonna retaliate? We literally met you where you're at. Like if you were charging us 25, we met you at 25. You're like, well, we're gonna get you back for this. How? You up it to 50, we're gonna up it to 50. Which is honestly a horrible idea. If these countries want to start a trade war, it will be so devastating for their economies. People have no idea. Because we're a deficit country, meaning that we've been importing more than we're exporting, we have the advantage. If a country relies on selling you something in order for them to live, if I stop buying your shit, what's going to happen to you? You can't send your kids to school. You can't afford to keep your stall open. You can't afford to keep your business open, make payroll, none of it. If I stop buying from you, if I stop buying extra shit that I don't need, you guys know what's going to happen? I'm going to get richer. This is the really important part that people don't understand. The US being a deficit country, first off, is fucking embarrassing because we used to be obviously the industrial hub of the world all the way through, like from the Industrial Revolution all the way through World War II and beyond. Cool. The tech revolution came in 01, even like in the 90s with Cisco and IBM. We were still producing PCs. But now we become more of a software and idea generating economy where we export the idea of Uber to your country. Your people are doing the work. There's no like, you guys own the cars, but we're going to export this idea of Uber and obviously the intellectual property of the patents and the technology. China is the only thing that may worry the markets. Thoughts? Good point, C4. We've given enough exceptions to China to know, like, that's the only trade war that could happen because they actually have enough leverage in this relationship to be able to cut off certain important supply chains and charge us more for goods that we just can't live without. But this is really important. Think about this from a national security perspective. If China wanted to turn off the faucet today on key manufacturing products, pharmaceutical products, automobiles, things that we need for the economy to run, could they destroy our economy in a month, a week, 24 hours? How long would it take for China to destroy our economy if they turned off the faucet? That's the scariest thing. This is what keeps me up at night. I'm just joking. I'll be able to survive in any fucking condition. I'm like a cockroach. Nuclear war happens. It's going to be taxes, right? It's going to be cockroaches, taxes, the retest on the 88.6, and me. That's what it's going to be. So I'll be good no matter what. However, if China wanted to turn off the faucet, 99% of people would be done for. Trump is not an idiot. I told you guys these tariffs are tactics and not taxes. We got Israel to drop their their tariffs to zero. Argentina is pledging to be the first country with absolutely 0% tariffs across the board with the US to be a free trading partner. I think this is really, really good. Canada and Mexico have sent 10,000 10,000, what was it? It was military personnel to their borders to secure both sides of the border. Secure, whoa. My bad, guys. This whole thing just glitched out on me. Oh no. Oh no. We glitched out. Is there an end goal for these? All right, let me know if you guys are if we're back. I know my video is messing up, but is my audio good? Are we glitching? All right, we're good. Okay. Is there an end for these tariffs? Do you think Trump will let up on the percentages as his term goes? Of course he will, because these tariffs are supposed to be reciprocal. Meaning, if you don't want tariffs, all you got to do as a country is just drop yours. Isn't that crazy how that works? If you want lower tariffs, lower your tariffs because we're going to match you wherever you're at. Now, there are specific requirements that we need from every country. And look, I'm becoming more and more of a critic of Trump. The last thing that I want is to sit there and cape for this man when he's destroying the fabrics of our supply chains, et cetera, et cetera. Where he's doing good, I'm going to support. Where he's not doing good, I'm going to criticize. A lot of these demands that he's making from these trading partners are unreasonable. Some of them are very reasonable. Let's take two examples here: Venezuela and El Salvador. Okay, he raised the tariffs on them because they wouldn't take back their illegal criminals that have come to their criminal immigrant, whatever the fuck the saying is. I'm not sitting here, guys. I didn't go to political correctness school, so I'm going to say a lot of stuff. I say the word retarded. If that should just give you an idea of where I'm at on this. These people, criminal, they're supposed to go back to El Salvador and Venezuela. They did not. Okay, the Venezuelan government tried to block them. So Trump raised the tariffs on those countries. Those countries did what? Of course, they took back their own criminals. And so tactics, not taxes. I think one by one, we are going to get our way around the world. This is a historical time. If we look back at the NAFTA agreements, if we look at NATO, if we look at the European Union, so like the European trade agreements that they have, these were all drafted post World War II. Now we've come a long way since then. To protect American manufacturing, you're going to have to basically make it unattractive for people to leave the US, which makes a lot of sense. Okay. What essentially is happening, we're paying minimal tariffs to other countries. There's two things. This is exactly, let me summarize the entire tariff thing in this one really easy to understand phrase. Not a phrase, but like in this explanation. Put something in the chats if you guys are ready for this, because I really only want to have to say this once, and I think we'll all get on the same page, and it'll summarize everything I've just said. Put something in the chats real quick, put a one in the chats, and I'm going to explain exactly how these tariffs are going to work from how we're expecting to make money now to where we're supposed to be transitioning to, because these are transitory, like this is a transitory measure. Okay. And I'm going to show you guys kind of how this works, but put something in the chats real quick, just so I know that you guys are paying attention for this part. Devaney, right answer as always. Okay. Sam, Amo, Joseph, Takua, C4, John. Okay, I appreciate you guys. Good stuff. Neville, appreciate you. Yup, yup, yup. Thank you guys for the feedback. So let's go through this. This is going to be very, 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 very simple. So there are two outcomes here, and I'm even going to write this out. There's two outcomes here for the tariffs. Outcome number one, companies stay overseas and pay the tariffs to sell to America. Do a text wrap here. Okay, the result of this equals tax revenue from tariffs. Bro, tariffs has been kicking my ass. I keep putting two R's. This is a fun fact for you guys just to know a little bit more about me. I competed in the state spelling bee. Okay, when I was younger, state spelling bee. The word that got me out in the elimination round was gazelle. Gazelle, for fuck's sake. I'm sitting there fighting for my life. Is it one Z and two L's? Is it two Z's and two L's? Is it two Z's and one L? I'm sitting there on stage fighting for my life. Misspelled the shit out of the word, by the way. To this day, still don't fucking know how to spell that word. Is it one Z? Is it two L's? I'm gonna say this like fucking Nate Diaz, right? This is America, motherfucker. We don't even know what a gazelle is. That's what I should have told him on stage. But instead, I sat there and tried to fucking spell it like an idiot. Got kicked out. I'm saying I tried to fight the first place dude. He was sitting there spelling shit off like the back of his hand. How'd you even fucking know how onomatopoeia is spelled, you sick motherfucker? We're like 12. I don't know. I'm still thinking about this to this day. It's I don't care, right? I don't fucking care. Didn't even bother me. All right, so the first option is the companies are going to stay overseas. They don't want to come back to America. They like the slave labor in China, Uyghur camp. Okay, fine. So then what the result is that they're just going to have to pay us tariffs and we're going to make the money that way. The second option is that companies come back to the US, okay, and don't pay taxes. He said, we don't know what a gazelle is. I'm saying Nate Diaz, they tried to say Nate was stupid. Nate is a fucking genius. We are in America. I don't know what a fucking gazelle is. You show me an antelope and a gazelle side by side, put a gun to my head and say which one's which. I'm eating the bullet. I don't know. You don't know either. Some of y'all are looking this shit up on Google right now. Guess what? 10 minutes from now, you're still gonna forget longhorns, shorthorns. Who fucking knows? All I know is I'm a lion. They're all fucking lunch for me. Everything. That's what I should have told them on stage. Say, I don't know how to spell it, but I'll tell you right now, when I wake up, they better fucking run. I should have seen if that would work. Right? I don't know what the fuck I don't know how to spell gazelle. But all I know is that clock hits 8 in the morning. They better warm up them legs and just start fucking cooking because I'm coming. Companies come back to the US, they don't pay taxes or tariffs. This equals boosting domestic manufacturing, which equals boosting the economy, taxes, and GDP. So the goal is, and this is kind of like the way that Scott Besson explains this is kind of like a melting ice cube. And so at first, most of the money is going to come from these tariffs, which right now the CBO report, which kind of does like an audit on the government budget, excuse me, is not going to include these tariffs. And so we're expected like to make something close to $600 billion from these tariffs this year. Over 10 years, it's supposed to equal something like $6 trillion. Now, as more and more companies come to the US and as more and more companies build factories in the US, so like if Hyundai, which is a Korea or which is a Japanese company, I believe, if they want to sell to the US clients, they have to build their shit in America. So you have to build a factory here, employ Americans, and then you can sell your cars here without having to pay the tariff. In which case, all the American workers and stuff, they all get paid. They pay American taxes. They go spend that money in the economy, and that boosts everything. So over time, the revenue, this is to kind of summarize it, the revenue from the tariffs will go down, and the money from the domestic production is going to go up. And then over time, this thing is supposed to balance itself out to where there's no hit to either one. Right now, we might take a short-term hit in terms of manufacturing, but we're going to be making the money on these tariffs. And then over time, as less and less money is coming in from the tariffs, because either other countries are bringing down their tariffs or domestic production is coming back, then we're going to be making more money from the domestic production and less money from the tariffs. Perfect balance, yin and yang. Make sense? He said it will take years. James, you're very correct. It will definitely take a long time for this balance to work itself out. But because of, like, we're already making money from the tariffs. And so by the time this balances out, it's going to balance ideally at the same proportion as each other. Like, we're going to be reducing the tariff revenue at the same proportion as the GDP growth. Is that going to take a year, 2 years, 3 years? It depends on how fast these guys are able, or these companies are able to come back to the US. It depends on how fast these companies are able to reshore manufacturing. Yeah, it's going to take a while, but people, suck it up. This is the greatest opportunity of a lifetime. Find out where the money is and get yours. Like, AI is going to be an emerging sector. There's going to be biomedical engineering and biotechnology engineering, and there's going to be software, and there's going to be software defense, and then there's going to be all these new jobs. For fuck's sake, if you guys like are in manufacturing, this is the opportunity of a lifetime. Where if there's companies that are overseas that are trying to sell stuff to the U.S. and all those are more expensive, and you can make it here domestically for cheaper, you have a business. All right. So now, how does that fit into the markets? Let me actually just show you guys real quick what I think about the crypto markets, the stock market, and maybe a few currencies. Then I'll let Scott Bessent and we'll go through some of those speakers that I showed you guys. We have a few cool videos to show you. We'll do this real quick here on NASDAQ. NASDAQ just opened with a gap. I'm here on the weekly time frame, even on the daily time frame. All time frames show that gap. Now, I have this really handy dandy fib tool out. If you guys have gone through the master class before, you guys will know exactly what I'm looking at here. We have a previous area of support. So each of these areas of support are significant on the way up. So if I erase everything, I'll kind of just show you the definition of a bullish trend is when the market is creating higher floors and higher ceilings. And so as soon as the market is reversing, you'll know because the market is now creating lower floors and lower ceilings. And so we've just violated every single one of these lows from this channel. And I call this a channel because typically when a trend starts, you have something that I refer to as the initial pump. After that initial pump, you have that baseline, and that baseline is like the Adam's apple. Is like something that we talk about in the master class. This is the neckline. From that point on, everything over here is a channel. Okay, because the market's been kind of steadily going up in like a similar proportion. Between here and here, this is the absolute low of the super trend. The super trend being this higher time frame weekly expansion. Then you have these micro trends in between. You have this impulse right here. You have this impulse right here. You have this impulse, kind of like this weird channel. So anyways, we've broken through all those areas of support. We're approaching the support of the super trend. So I drew a fib. I found my entry level right here at the 88.6, 15,000 flat. We have a psychological number on the higher time frames from low to high. And this is just like a pretty simplistic way of looking at these things, but I like to see that markets are creatures of habit. And so we have an A to B, C to D relationship right here, meaning that these moves are about equal size. And so whenever we have a super trend on NASDAQ on the higher time frames, typically we have a 61% correction, maybe an inverted head and shoulders at the 50. Very straightforward stuff. So on the higher time frames, like now that we have this new super trend, if we were to find the 61 fib, we would notice that's right here, right at the same exact level that we just found that 88.6, which is the 15,000 price level. The 15,000 price level is where I'm expecting the market to come back and retest before we continue. Can you guys put a 1 in the chat if this is very, very straightforward stuff? So if you guys don't know what I'm talking about at all with the fib movements, this is another reminder for you guys to click the link in the description and sign up for the masterclass in April, or that's this month, to learn how these markets work and to really master NASDAQ. Because once you understand the higher time frame, once you understand where the next area of liquidity is, you're not going to be shocked when the market just drops out of the sky and reaches for that level. Instead, you'll be able to, when in doubt, zoom out, find that zone on the higher time frames, and then scale down to, let's say, the 30-minute or the 15-minute to trade at that level, where then you will see the model that we teach in the class form itself right at the zone. You'll have your phase one, then you'll have your fake in one direction, and then you'll have an instant pull into that area of liquidity. Okay, that's going to be our entry zone, the 15,000 level. As soon as it breaks back above, you guys remember those 4 points we talked about last week? Break through the zone, close back above, retest back inside, form a higher low. Once we have that higher low formed, we're going to enter there, take the trade all the way up from zone to zone. So this is how to trade at the higher time frame levels without getting caught in these massive whipsaws that happen that are really designed to take a trader's money before the move really happens. Now, in terms of gaps, how do gaps fill and how are gaps supposed to react? Become a Chart Addicts member. I'll explain to you guys in the members only live stream. Cool. Drop a like on this YouTube stream if you guys have found any value in this so far. Maybe I'll give you guys a quick 5-minute trade. You guys want a quick scalp here, just to basically take some bacon home to your family. Say your wife is watching, say, what are you listening to over there? Every Sunday you're over here listening to some stuff. Is this guy even making you money? I'm gonna get you out of trouble. All right, I'm gonna get you out of trouble. You're gonna say, "Bam, I'm working hard. I'm working hard over here while you're at your computer." Really, you're gonna be watching the next episode of fucking God. I don't even know what you guys watch nowadays. I don't watch TV, but I'll be able to save you guys from that argument with the missus by making sure y'all make some money by the time that you leave this chat or by the time that you guys leave this stream. Okay, let's take a look at this. So, if you don't have structure that you can latch onto. We have the higher time frame zones that we're looking at here. But if we don't have structure that we're latching onto, then I'm going to try to find structure within this gap. Okay? Wait a second. Get out of the annotations. Get back over here. Oh, I deleted everything. Okay, cool stuff. All right, now that I have my higher time frame zones, very crucial. I'm going to have my zones marked off here. Look at the resistance and the support of the range. So as I was explaining to the Chart Addicts members, the market comes back to use the gap as resistance. This is going to be very, very simple. We have more room to the downside. And so we'll have established a high. By the time we wake up tomorrow, ideally we'll have established a floor. And so we'll have this perfect range here that we can trade from. We have the low and the high, and then we'll be able to short from these highs tomorrow morning. Very, very, very simple stuff. If the market, for some reason, which I don't think will happen, respects this inverted head and shoulders, closes back above the range, comes back into retest, forms a higher floor, then we can actually buy it all the way up to the top of the range. Okay? If we use this area as resistance, then we'll come back in for the retest and continue. This is how gaps typically work. We can go through this in more detail on the members' pre-market live stream tomorrow. All right, use the higher time frame fibs, people, to trap price, and then look for breaks of that price and then recoveries. Put your entry at the, when it enters back inside the zone, and put your stop loss below the wick. Very straightforward stuff. Now, I've been calling for gold to hit 3,000 for a very long time. If you guys go to the Chart Addicts website, which is listed in the description below, it's chartaddictsfx.com. This is where we do all of our teaching, our education. This is where you guys can register for the Chart Addicts, the NASDAQ Masterclass. But in the analysis section here, oh, wait. I want to show you guys Forex News Outlook. FX Summit, NASDAQ, 2023 market outlook. Let's see 2023 market outlook. I'm pretty sure I've been calling for $3,000 gold every single year on these outlooks. This is something that I put together every year, which is kind of like where we're at, what happened last year, the biggest economic factors that are influencing the markets for that year to watch out for, some pretext on GDP, employment, inflation, which were the biggest topics of 2023, the Fed's hiking cycle and how that's going to impact markets, my expectations for the global events. I said that Russia and Ukraine war was going to escalate 2023. Yeah, guess what fucking happened? We damn near went to World War III. China did start military operations. They did make a move on Hong Kong and they did make a move on Taiwan. They literally took Hong Kong. So I guess I was fucking right about that one. Japan's economic dilemma, that was spot on as well. The biggest losers of 2023 was US equities. Yeah, fucking A. I was good. Bonds were the biggest winners of 2023. Oil and other commodities crushed it. Did I say anything about gold? Fuck, I didn't. Sorry, guys. Anyways, you'll be able to go through this on your own, but I have been calling for a $3,000 gold price for a while. Now, obviously, um, this is something I want you guys to pay attention to. The gold market, like the gold reseller market, has actually gone ballistic. I don't know if you guys have seen those commercials, like the American Heart for Gold commercials. It's like the new Manscaped on fucking YouTube. I'm seeing it's like the new Blue Chew. I'm seeing those commercials everywhere. I trust American Heart for Gold or American Gold Co. or whatever the fuck it is. Why? Because these people who have been stockpiling gold for years, who have been buying gold at sub 1200, they're in such deep profits, but they need the market to be able to buy these things off them. So they're creating all of these like incentives. You can get like they turned Megyn Kelly and like Dave Smith into fucking affiliates for these gold companies and Tucker Carlson and shit. It's like these guys know what they're doing. And so there is a release right now of all these gold reserves that folks have been holding. And so I think that we're going to see a season of sell-off. But because of inflation, like the way that prices work, this is the same reason crypto is going to the moon. It's not because crypto is going to get adopted and all this bullshit. Your house didn't get more expensive between 2019 and 2025 because you did some renovations in your kitchen. It went up because the inflation in the currency requires more of that currency to pay for the same unit. Okay? You need more dollars to pay for the same unit of house if you print a shit ton of the currency. And so gold will go up in price because the denominator, the dollar. So it's gold spot versus the dollar. If the denominator gets overvalued, if it goes up in price, or sorry, if it how do I say this? If you inflate away the currency, all of the assets that are priced in that currency become more expensive. If there are more dollars in circulation, it will require more dollars to buy the same stock, more dollars to buy the same crypto, more dollars to buy the same house, more dollars to buy the same gold. All right. And so gold will continue to go up. It'll go to 5,000 and all these things over time. That's why it's called one of the greatest inflation hedges. Because if you owned a gold bar 30 years ago and you've been holding it this whole time, you can sell it. Let's say you bought it for $200 back then. You can sell that same $200 gold bar for $3,000 today. And so that $3,000 that you're gonna get is worth the same as the 200 that you paid for it. You're gonna be able to buy the same stuff as that $200 back then, right? But the number just looks bigger on paper because now you just need more of these little currency units to buy the same gold. So assets protect you against inflation, okay? And that's why it's important to own assets, especially in this next wave of hyper asset inflation. We're going to see the stock market and gold and crypto do something that we've never seen before in the next 3 to 4 years during Trump's presidency. If you do not protect yourself against this inflation, all you're going to see is that your Costco bill doubled up, right? All you're going to see is that it's going to cost you double as much. Man, I used to go to the grocery store. I used to go back to school shopping for my kids. I'd only pay $100. Now I'm paying 270 and I can barely get the same stuff I was getting before. What the fuck happened? You're going to wake up one day with consumer inflation knocking at your door. However, if you're actually spending all of your extra money to buy assets instead, then in the next 5 years or 10 years, you're going to get rich as fuck for doing nothing. And all these things that like people complain about, and all these things that people say, like, oh, rich people have the advantage and they just, and their kids are spoiled and their kids are this. But you should hope that your kids are fucking spoiled. Not in like the real sense, like they're entitled and shit, but like that you are able to provide them with way more than you were given. Because you should be making the choices today to take advantage. Yeah, your grandparents bought that house where you're at it for 30 grand back in the day. And yeah, it was easy for you, grandpa. But now that fucking $30,000 house, they're giving it to you for 700, 800 grand. That was a good fucking bet. Now, that shit took 70 years. I don't have 70 years. So I'm looking for assets that are going to give me that same return, but in a much shorter amount of time. And that's why I preach crypto so heavily. On top of the asset inflation, you can borrow against those assets, which really is a whole different conversation, but that's the name of the game. That's how rich people really use their money and their assets. Rich as fuck for not doing nothing, but you'll have to take that RFID chip. What the hell is the RFID chip? Is that an Elon thing? This guy's a genius. He been hip too because gold is real value. Gold is not real value. See, you're reading this completely wrong. Gold will not go up because it has inherent value. Because it's not special compared to crypto. It's not special compared to real estate. Gold is not the fucking thing. Gold is a shitty industrial metal compared to silver. Gold is not even rare, right? It's artificially rare. The reason that gold will go up is because the dollar is worthless, not because gold is valuable. Does that make sense? The denominator is getting inflated. And so gold is just as worthless as it's always been. Even less, even more worthless now because you can't actually spend gold at the store. Back then, at least you could spend it. It was a medium of exchange. So buy things that have a long-term potential to go up. I'm in the digital world now because I don't want a 2x return on gold, excuse me. If I buy Bitcoin at 50K and I wait till 100K, I've doubled my money. I can do that in 2 years, right? Backed by the good faith and credit. Um, the gold isn't. Gold actually does have perceived value, and the perceived value is through the perceived scarcity, which means that we assume that diamond and gold are very rare, and so we ascribe scarcity value to them. But really, the De Beers family, who runs a monopoly on the diamond trade, or like whoever the gold monopolists are, they actually have an artificial control over the supply of these metals. And so they actually artificially control the price of the market by either releasing or contracting the supply that's provided. Um, and so it's really they don't actually have an intrinsic value. They have a perceived value. They have a perceived scarcity value. Now, I would actually argue that cash actually has way more value because they're both protected by the full faith and credit. But the petrodollar system, like if you want to look at what happens when you try to stockpile gold, like Japan and some of these other countries, not much. We're not really invading the central bank of Japan because of their gold deposits, or all these family offices in Europe that have like secret dark pools of liquidity and dark pools of money that are stockpiling central banks worth of gold for these family offices. What will get you capped is if you're Gaddafi and you try to sell oil in your local currency, or you're the Shah of Iran, or you're Saddam Hussein, or you're Mubarak from Egypt. If you try to sell oil in your local currency, you become Afghanistan. You guys understand? And so the petrodollar system, this global contract where all global trade of oil is settled in US dollars, that's what protects the value of the dollar. Is through the US military and through coups and through all these other different things, because that's the only reason the dollar has value when we wake up tomorrow morning. So I would actually argue that full faith and credit of those fucking tomahawk, whatever the fuck they're called, those guys, give me a cool military thing from the US, like a cool bomb. Yeah, these Falcon 9s. All right, the faith and is protected by the faith and credit of this Falcon 9 flying to you, of these Jericho missiles. All right, that's what it's backed by. That's the value of the dollar. Isn't gold not a fine pure metal? Guys, I don't fucking know. What do I look like, a geologist to you? So what crypto assets do I request for you to, do I recommend to invest in? Do you really think I'm going to give away that sauce to non-members? Are you out of your fucking mind? I'm literally giving out enough sauce that you could literally feed your children and you can teach your children about how to build wealth for life. I just gave you the code. Some of you guys thought that you'd build wealth by getting a 10% raise at your fucking job over the next 30 years, up until this stream. Now you're asking me which specific assets to buy. Am I going to get a fucking commission if I tell you? No! You're not going to give me a commission? Hermes Birkins average 15% a year? Shit. Actually, I had no idea about that. How isn't gold valuable if you say it's going to go up? This motherfucker has not been paying attention at all. I give up. All right? Fucking mush for brains. This is ridiculous. Gold has its value. Since we replace its buying power, currency aside, rigged scarcity builds, as Roy mentioned, as a perceived value. Yes, JLP, you got it. At least the members are paying attention. Okay, gold. It's on a retracement. Clearly, where's it going to retrace to? Probably to 2,900. What's going to happen after 2,900? We'll see how the tariffs impact global supply chains because I think that gold, as a safe haven, has kind of lost its. Gold is behaving the same way that all the risk assets are behaving. Commodities and other risk assets, and if you want to consider crypto as a commodity, which I personally do, then they're all just related to the value of the dollar. I guarantee if we open up a dollar chart, the dollar will be going up in the short term, right? And so we've kind of gone back to this counter value, this counter correlation between the dollar and then these different like live assets. And I'm gonna say live assets, meaning commodities that are priced in dollars, high risk, high beta assets like crypto that are in dollars, and then traditional stocks that are priced in dollars too. Cool. All right. So long story short, 2,900 and then gold go up. Let's look at cryptos real quick. Cryptos, XRP coming back down for a correction. I think we have a little bit more downside here. Why? Because when the whole world thought that Trump is back in office and it's all going to be, oof, that's some serious heat right here. How to make real money. I'll put that off to the side. When everybody thought that Trump was going to come back into office, institute all of these pro economic policies, really reinvigorate America's manufacturing and all these things, they thought it was going to happen without any consequences and without any costs. These market participants got a little bit too excited. They thought that he was going to pressure Jerome Powell to lower interest rates and like all these things are going to fall into place. Yeah, they did not expect him to start a tariff war, right? And so I think that the market got a bit excited, got ahead of itself. There was some uncertainty between the election when Trump won and where we're at today. I think there was some enthusiasm about the lawsuit for XRP getting dismissed. I think that Brad Garlinghouse, the CEO of XRP or of Ripple Labs, went to Mar-a-Lago and was ended up golfing with Trump. And Trump said that he's trying to make America the crypto hub. And so there's all these like small pieces of news that are very bullish for the market. But when these institutions want to put cash on the sidelines and then just wait, Warren Buffett is holding $330 billion of cash right now, waiting for the bottom. So have we reached the bottom yet? I don't believe so. I think cryptos and stocks have another 2, maybe 3 weeks, right, of bearish action. I'll summarize the whole fucking stream right now. 3 weeks, maybe 4 weeks of bearish action. Could be less depending on how Trump, like depending on how these other countries accept these tariffs. If they don't get retaliatory, perfect. If they do, this thing could last longer. But for now, I'm expecting 2, 3 weeks, and then we're going to have a massive rebound. So use this as an opportunity, people. This is not financial advice, but you have an opportunity while cryptos are crashing. We just saw XRP, we just saw Solana, and of course, we have Bitcoin crashing as well. Bitcoin crashing means this is an opportunity of a lifetime. 77,000 for Bitcoin. Like people, if you're not rich and you don't have fucking money in crypto and you are looking at the market over here at 110,000 and you were thinking about buying up here because you thought you were going to miss it, this is the opportunity of a lifetime. You can only get rich like as brokies, which all of us are, right? Unless you're worth $1 billion or $100 million in this chat, right? Or tens of millions, even tens of millions, bro, you're still a brokey. If you're worth over $100 million, you're excluded from this. The rest of us, we're all brokey. The only way you can get rich is in a recession. The only way you can change your tax bracket is during recessions. We don't need a full-fledged recession economically in order to have a market recession or a market bear or a bear market or some kind of correction. This market correction is the opportunity of a lifetime for you to change your family's future. And so you're not going to get rich buying Bitcoin at 77 and waiting for it to go back to 110, right? It's more money than you'll make on gold, that's for damn sure. It's definitely more money than you'll make on stocks. That's for damn sure. But Bitcoin is a proxy for the rest of the market. If you see that Bitcoin's price has dropped from 110 down to 77, then you know that XRP is down as well. Buying XRP at 190 and waiting for it to go back to let's say like 320 or 340, whatever this price is, you can almost double your money here. This is almost double your money. Slightly better returns than Bitcoin. Let's look at Solana though. Solana, the high is at 300. The current price is $100 fucking, which means that if you buy Solana now, let's say you put in $1,000, and this is without leverage. We're not talking about leverage here where you're trading this on a margin account. I'm literally talking about opening up your Coinbase and buying it at a spot price, 1-to-1. No leverage, no margin at all. All right. Let's look at the upside here where if the market goes from 100 down to 50, your downside is 50%. So half of your money could go out the window. All right, I'm going to use a slightly bigger number because I want to really drive this point home. If I put in $10,000 because I'm rich, I'm going to put $10,000 in to Solana. The worst thing that can happen, the downside scenario, is it can go down to 5,000. 50% correction. The upside right here, obviously the upside is way higher, right? Because we don't actually know where the next high is going to be. But if we just look at this previous high, my upside is I could triple my money, putting it at $30,000. Okay? So my downside is 50%. My upside is 300%. That's almost a 6-to-1 risk to reward, correct? 6-to-1 risk to reward on this trade. So I'm not even worried that the 10,000 is going to go to zero. And if the market breaks the 300 price, I can triple my money or more. That's how you triple your money. If this was 100K, you'd go to 300K. How long would it take your $100,000 house to go to 300,000? A long fucking time. How long is it going to take for the market to go from 50 up to 300, which is actually a 6x return? Okay, if I buy right now with $10,000 and it goes back up, that's $30,000. If I wait for this thing to keep dropping and I get in down here at the $50 mark, that's a 6-to-1 return for fuck's sake. So that'll be $60,000. C4 says 75x leverage hold, right? Like I'm telling you, when you start to see numbers like this, you're like, well, shit, how much would it be on margin? I have a good friend of mine, QB Stu. He's currently in this XRP trade that he's been posting about with margin. And it's so fucking stressful. You got to be somebody like him to be able to even put up with this. All right. Now I'm going to go through this pretty quick. Wow. Super secret magnet indicator. Can't beat it, can't touch it, can't fight it. We're back at the support. Wow. At the 88.6, people, the magnet's coming back out for a fifth fucking time. We've been playing this magnet game since August of 2023. And guess what? You guys are actually here to witness the next leg of this. The next time that we were able to do this was in September of 2024. All right. This is exciting. We're going back up, people. We're going back up. Magnet. Super secret. Magnet indicator. Can't beat it. Can't touch it. Can't fight it. If you guys have a J, twist it, bite it, light it, come back. Okay? Because this thing's going to take a fucking while before it hits its targets. Same exact price targets. We're not moving a single thing. 104.5, 105.6, 107.5 radio FM. Make sure you guys have this chart marked off, those levels marked off, and just watch the magic happen as price moves back towards those levels. Dollar goes up, which means Euro USD will go down. Euro USD at the 88.6. If you guys are looking for a good swing trade on the currency side, you're welcome. It doesn't get better than this. 88.6 to 61 trade already completed. Next area of interest is 1.07. Could we have a double top up here? Probably not. If you're looking to trade this and you're looking at this on the higher time frames, you'd want to see, this is from the weekly, you'd want to see at least a 50% correction of that wick before continuing to short to the downside. However that looks on the smaller time frames, I'll let you guys figure that out. Members, we can go through this in more detail. So long story short, you can make some significant money on the big cryptos. As you go to the meme coins, there's a bigger multiple return that you can get. But I highly recommend that you guys don't invest in anything you're not willing to lose your money in, because this is how the markets, well, this is how markets work. You got to be able to take the risk. Okay. If you guys are still here, congratulations. Please drop a like on the stream, unless you're a bum. If you're a bum, please don't drop a like on the stream. I don't want you guys contaminating the like ratio on the stream with the bumminess. But if you guys are real ones, if you guys have been watching the stream for a while and you're Chart Addicts members, or you're not a Chart Addicts member, you guys want to show some love, drop a like on the screen on the stream. It would make a lot. It would mean a lot to the team. If you guys want to drop a super chat and throw some love so that the media team here can get paid out, that'll be awesome. This is what funds all of the great YouTube videos. If you guys want to see more amazing YouTube videos, make sure you guys register as a member for Chart Addicts, because that's really where all of the funds for the company goes, is back into building this great media kind of arm so that we can get out great information to everybody. You guys know the drill. All right, I'm going to play some videos here from Scott Bessent, from Howard Lutnick, and of course, from Ben Shapiro. Ugh. Right? And then let's see what they say. Maybe I'll add some commentary here. But also, then again, maybe not. Okay, we'll start with something pretty simple, which is first things first. Let's make sure that we have our chart opened up here. So in case there's a trade that's going on, we might be able to catch this thing while we're all on the stream together. Okay, go ahead and extend this thing right, extend it left. Beautiful. Double tap, bring this thing back down. Gorgeous. I'm sounding like fucking Gordon Ramsay every day. Like like just kind of thinking out loud, just narrating my own stuff. I kind of feel like a douchebag. He'll be like, cool, this is a tablespoon of salt. Beautiful. I'm like, bro, did you just narrate your own fucking, did you just narrate your own fucking, what did you just pour some salt in the water and just said it was beautiful? Is this cap? Anyways, let's go through. This is Jerome Powell's take on tariffs and what they mean for inflation.
We face a highly uncertain outlook with elevated risks of both higher unemployment and higher inflation. The new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. Our monetary policy stance is well positioned to deal with the risks and uncertainties we face as we gain a better understanding of the policy changes and their likely effects on the economy. It is not our role to comment on those policies. Rather, we make an assessment of their likely effects
as he comments on the policy,
observe the behavior of the economy, and set monetary policy in a way that best achieves our dual mandate goal. We have stressed that it will be very difficult to assess the likely economic effects of higher tariffs until there is greater certainty about the details, such as what will be tariffed, at what level, and for what duration, and the extent of any retaliation from our trading partners. While uncertainty remains elevated, it is now becoming clear that tariff increases will be significantly larger than expected. And the same is likely to be true of the economic effects, which will include higher inflation and slower growth. The size and duration of these effects remains uncertain. While tariffs are highly likely to generate at least a temporary rise in inflation, it's also possible that the effects could be more persistent. Avoiding that outcome would depend on keeping longer-term inflation expectations well anchored on the size of the effects, and on how long it takes for them to pass through fully to prices. Our obligation is to keep longer-term inflation expectations well anchored and to make certain that a one-time increase in the price level does not become an ongoing inflation problem. We'll continue to carefully monitor the incoming data, the evolving outlook, and the balance of risks. We're well positioned to wait for greater clarity before considering any adjustments to our policy stance. It is too soon to say what will be the appropriate path for monetary policy.
Yeah, basically,
the baseline tariffs come into effect first, then there.
Basically, he said, we're just gonna roll with the punches, which is honestly, I think, great news. Okay. Let's go over here. Make sure you guys check out the link in the description. We have promo codes for the masterclass. All you guys have to do is just reach out to us and ask. Chart Addicts 50, I believe, is the code for previous members. But if you guys have made it to the end of the stream, I am putting that out there because anybody who cares enough about this to stick around this long, you guys definitely deserve to get in on the action. Okay. Let's see. We got Ben Shapiro here. Is Scott Bessent, Howard Lutnick. Let's take a look at Scott Bessent real quick. We'll kind of skip around here, but this is our Treasury Secretary. He is one of the smartest economic minds that we have. And let's just see what he's got. Members, I know this is a 1-minute chart. I'm actually going to delete this for I know some of you guys are fiends and you're just going to find a trade somewhere in here. That 88.6 buy right here is going to be accompanied by an 88.6 sell. And we all know it, but it's Sunday. So just, I'm glad Omar's not on here. He'd have pounced on this mad quick. Let's see what Scott Bessent has to say.
Is Treasury Secretary Scott Bessent. Secretary Bessent, welcome back to Meet the Press.
It's good to see you.
It's great to have you back after a very big week. Let's start with the market reaction to President Trump's announcement of his tariffs. As I just laid out at the top of the program, the markets lost more than $6 trillion in value. Was this disruption always part of the plan, Mr. Secretary?
So markets are organic, the animals, and you.
Does anyone trust him? Does anyone trust Scott Bessent? Something's off about him. Something's like, you know what I'm saying? He's like too much of a caricature of a Treasury Secretary. Now, I know a lot of economists, and so let's be real. He you know what I'm saying? He's one of us. But he was also at the helm of like the biggest trading company in the world.
Know.
And he's the guy, this is the guy that was in charge of crashing the Bank of England. Like Black Wednesday. Like one of the most important days in Forex trading history. Like the fucking day of like Armageddon for markets. Like the fucking day was orchestrated and headed by Scott Bessent. This is the guy. Not a single fucking pulse change on this man when they were ransacking the Bank of England at the expense of, you know, all these pensioners that are out there getting cooked right now.
Know what the reaction is going to be. One thing that I can tell you as the Treasury Secretary, what I've been very impressed with is the market infrastructure, that we had record volume on Friday and everything is working very smoothly. So the American people, they can be very take great comfort in that. And in terms of the market reaction, look, we get these short-term market reactions from time to time. The market consistently underestimates Donald Trump. I remember that in 2016, the night President Trump won, the market crashed. And it turned out he was going to be the most pro-business president in over a century, maybe in the history of the country.
There it is. So there's some historical context there where the traditional economists, just like the traditional everything, like all the traditional polls that were telling us that Kamala Harris was going to win, the traditional polls that said that Trump was, was going to lose to Clinton, the polls that said that Trump was going to be an overall negative for the economy, all of those traditional sources of information were completely wrong. And so this time around, I think the market is listening to those experts, quote unquote. They're saying that Trump's tariffs are going to be negative and this and that, when everyone realizes these are the single most important economic decisions and the greatest thing that's ever happened to American to the American economy, I think that this is where we'll see the rebound. So right now, everyone's trying to find a reason that these tariffs won't work. And I think that they'll very quickly realize that Trump is probably the greatest president of our lifetime. And so Scott Bessent saying it the best that it can be said.
And we went on to very high after inflation returns for the next 4 years.
Well, but this was the biggest two-day crash since the pandemic. The president on Saturday urging people, quote, to hang tough, saying it won't be easy. And I guess the big question on people's minds, Mr. Secretary, how difficult is it going to be? And how long are Americans going to have to hang tough?
Well, I reject that the assumption. There doesn't have to be a recession. Who knows how the market is going to react in a day, in a week. What we are looking at is building the long-term economic fundamentals for prosperity that I.
All right. I'm starting to like Scott Bessent a little bit more the more he talks. Anyone who prioritizes the stock market returns above the long-term stability and health of this country is just looking to score political points. They're looking to get reelected because the stock market is kind of like that superficial measure. If you're like, bro, we don't give a fuck about the stock market. It's going to work itself out regardless if the American economy is strong. But we're trying to build the underlying fundamentals of long-term stability. Fucking hell. All right. Maybe Scott Bessent, he's starting to grow on me.
I think the previous administration had put us on a course toward.
Just in terms of the uncertainty, I think that people are feeling and seeing, and President Trump saying he wants people to hang tough, acknowledging there's going to be what he has described as a short period of pain. Can you help provide some clarity for folks? How long will this period of uncertainty be? Are we talking about weeks? Are we talking about months? Are we talking about years?
This is an adjustment process. What we saw with President Reagan when he brought down the great inflation and we got past the Carter malaise, that there was some choppiness at that time, but he held the course, and we're going to hold the course. And this has been years in the building, years in the making. This unsustainable system, our trading partners have taken advantage of us. We can see that through the large surpluses. We can see this through the large budget deficits. And also, Chris.
So he's basically just reiterating a lot of the stuff that he said in different interviews. One person we really haven't heard from, which is, let's be honest, somebody who's way more important to this topic than Scott Bessent is, because Scott Bessent might be the kind of like the adult in the room, where as a professional economist and as one of like the greatest traders of all time, like he really got his finger on the pulse of what's happening around the world. But Howard Lutnick, in terms of the position itself, is way more instrumental and way more relevant to trade than the Treasury Secretary. The Treasury is the piggy bank of the US. So you have like your banker, but then you also have the Commerce Secretary, the one who's actually in charge of the trade. And so Howard Lutnick is going to be the one that's going to be doing the negotiations with all these various countries about these trade policies. And let's listen to what he has to say.
Up to be another turbulent week as President Trump's trade war with the world escalates.
I hate this bitch already. I'm sorry, guys. Didn't mean to throw that word. No, I don't give a fuck. Who the fuck am I apologize? She said the trade war with the world. How is reciprocal tariffs a trade war? You're ripping us off, and so I'm just gonna charge you whatever you're charging me. And they're like, this guy over here is starting war. Like, it's not even true. What if I face the nation? No, but you should go face the mirror and fix your makeup. All right, never mind. Guys, it's a little late. All right, this isn't the morning stream. I have no self-control. I am completely unhinged. This is what you're signing up for. So just brace yourself. All right, whatever comes out, this is what we get for my PR team leaving me hanging this late at night. All right, let's see if we get kicked off to YouTube tonight. Okay.
Global sell-off triggered by President Trump's tariff announcements wiped out more than $6 trillion of wealth from the U.S. stock market in just 2 days. In a social media
wiped out what? Like, oh my! I'm supposed to be letting this video play. I promised I wouldn't interrupt. How did it wipe out the wealth? Stock market values went down, but there's no wealth that has been wiped out. Like your wealth is not real if it's predicated in the value of your stock. A lot of these billionaires that are billionaires in stock alone and not in physical assets, they're not actually billionaires because on any given day the market could crash and you're not a billionaire anymore. So there's no real wealth that has been. Anyways,
The
we'll get to
Post
this.
yesterday, the president urged the country to
And
hang.
side note, most of the sell-off is not people selling spot, like the spot value of the asset. Most of the sell-off is actually happening from traders trading on margin. And I don't mean retail traders like us. I mean institutional trading happening on margin. This high leverage trading firms that I think are driving the majority of the price dips. You have all of these high risk, high beta funds, these algo trading funds, all becoming net sellers because the market's dropped beyond a certain percentage in a short amount of time. And because it's like 3 standard deviations below the mean, they're all net sellers. Except they're not just net selling spot. They're not like Fidelity selling off your pension fund. Fidelity and Schwab and State Street and Vanguard, they're not selling your. It's these hedge funds that are shorting futures on margin that are creating the majority of the price dips in a short amount of time. So that aside, okay.
Tough. All this as tens of thousands of people took to the streets, hedge fund managers this morning. Did you expect this level of shock in the financial markets?
Well, you've got to realize this is a national security issue. I mean, we don't make medicine in this country anymore. We don't make ships. We don't have enough steel and aluminum to fight a battle, right? All our semiconductors are made overseas. So every button we press when we try to start our car or even use our microwave, these are all semiconductors. They're all made elsewhere. We've got to start to protect ourselves, and we've got to stop having all the countries of the world ripping us off. We have a $1.2 trillion trade deficit, and the rest of the world has a surplus with us. They're earning our money. They're taking our money.
Right.
And Donald Trump has seen this, and he's going to stop it. So it is going to be a big change. Of course, it's going to be a big change, but the rest of the world has been ripping us off for all these many years. Donald Trump has seen it. He's spoken about it.
I understand
and he's just
that.
not going to take it anymore, and that's his model.
And that was abundantly clear during the presidential campaign how much the president truly believes in tariffs and putting him at the center of his economic policy. But you saw absolute panic in the global markets. Did you expect that, or were you surprised?
No,
there is no panic. Everybody knew what was coming, and they're all just waking the fuck up from their slumber. It's like this guy's been ripping you off, and he's like damn near high on the corner, like on the street, and then now they're all waking up, and it's like, oh, there's panic everywhere. It's like that's what happens when you have to like get your eyes back on the road. Yeah, you might be a little fucking rattled, right? But like, bro, the whole world had to wake the fuck up and stop being asleep at the wheel. So I wouldn't say this is panic. This risk off sentiment is more about reducing risk than it is about people running around with their chickens with their heads cut off.
I think the point is you need to reset the power of the United States of America and reset it against all our allies and our enemies alike. The idea that all the countries of the world can run trade surpluses with America and buy our things with us. Remember, $1.2 trillion. In 1980, we were a net investor, meaning we owned more of the rest of the world than they owned of us.
Yeah, it's a different world.
And
It's a different market.
now they own $18 trillion of us net. So that means the rest of the world, every year when we run a $1.2 trillion deficit, the rest of the world buys $1.2 trillion of America, and it goes up and up and up. And eventually we're not going to own America, and we are going to be owned by the rest of the world. Imagine if we had a war and we can't build a ship, we can't fly a plane.
Bro, I'm going to say this word again, so if you're sensitive, get the fuck off the stream. God, this bitch is going to cut off the Treasury Secretary just to say the phrase, yeah, but we're in a different world today. Bitch, shut the fuck up. This guy's explaining to you why we're getting ripped off and how we should be going back to a more fair trade balance. And you're like, well, yeah, but like we're in a completely different environment today. Yes, because we're getting ripped off. And then this is how we're going to stop getting ripped off. We shouldn't be in a different environment today. We should not be a net importer. We should not be a deficit country. We should have trade surpluses. Well, because we don't, all of our critical infrastructures, like he just mentioned, everything from semiconductors to medications to wartime equipment to the raw materials for wartime equipment, all are manufactured by our number one enemy. And she's like, well, it's a different time today. Oh, shut.
We can't
Okay.
build our own planes. We don't have our own semiconductors. This is what the president is here to fix for America. It's in his hands, and he wants to fix America. This is a chance to fix
Understood.
America, and
So-
we need him to fix it for our children and our grandchildren.
Okay, but for businesses to do what you're doing, because what I hear you laying out there is a plan to reindustrialize the United States and to bring companies back to America. For a CEO to choose to invest.
Well said.
But for a CEO to make
I really hope that was sarcastic. It's like, you got the very basics of what we're trying to do. Like, good job. It sounds to me like you guys want to raise tariffs. It's like, bro, somebody get this bitch a fucking Nobel Prize. This is insane.
those decisions, you know this, they need certainty. They need to know if it costs them more to stay overseas or if it costs them more to move here. So can you give them clarity so that they don't just cut jobs because they're dealing with the cost of these tariffs? Can you tell them how long they're staying in place?
Absolutely. The United States of America is going to protect the people who invest in America. Trillions and trillions of dollars, you heard the president speak about it, are coming to invest in America. This is the economy of the world. We are the consumer of the world, and companies need to build it here, and we will protect them for building it here.
Okay,
we will
so
help the American workers. Yes, American workers are more expensive, but they're better. We're going to protect all the factories that come to America, and that's what's coming
She's gonna keep saying, I got it, and then ask the next stupid fucking question.
here. So
I haven't seen this interview, by the way. I kind of pulled this up because I saw a clip of this and basically wanted to react to this live with you guys. It did not disappoint. I'm like, bro, I don't know how these guys can keep their cool, but they're clearly way more media trained than I am, because they know that if they say something sarcastic or they say whatever it is, they're gonna clip the media is gonna clip them up and just turn them into like the fucking devil. And so they have more self-control. This is why if you guys ever ask me if I'm gonna run for Treasury Secretary or if I ever get appointed or any of these things, fuck no. Now, clearly, if the president ever asks you to step into a role like this, you literally can't say no. Like, they're not exactly asking, but I'd much rather do what we're doing right here. Is I'm gonna make money trading these markets and make a shit ton of money betting on these different instances, but not have the responsibility of dealing with these fucking people who are just like, well, some people think that Trump's trade war is going to be bad for businesses. Who's some people, bitch? You and the three editors who are talking in your earpiece right now? Who's the people? Oh, well, people say, but you're people. You're the only one saying it. It's you. Journalists are journalists are especially financial journalists. But anyways.
Okay, is the 10% tariff permanent?
Protect them.
So when three of the president's other economic advisors.
So this section here is about whether there's anything countries can do to lower these taxes or to lower these tariffs. Like, can they play balls or anything that they can do? This is a pretty important question here. I'll let this thing play all the way through.
Who are on other networks today say that 50 different countries have been calling the White House to try to talk about the tariffs. What does that mean? Because that makes it sound like there is a negotiation, which is different from saying the tariffs are permanent.
Well, what it shows is that all these countries know that they've been ripping us off, and the day has come for that to end. Now, the problem is, it's not just tariffs. Like, I'll give you an example. Like, Vietnam said they'd like to be 0-0. Remember, Vietnam sends us $120 billion worth of goods every year.
Yes,
and we send them about $12 billion. Wait, we send them $12 billion. So it's not the tariffs. It has nothing to do with tariffs. If they went to 0-0, they would go to 200 billion with us. We need to stop the ripoff, and 0-0 is the way.
I know, but we don't have 0-0, sir. We don't have 0-0, actually, because when we saw the president stand in the Rose Garden holding up that chart that you helped make, that wasn't actually tariffs. That was actually confusing to investors because it was some kind of other formula, and the countries themselves seemed kind of random. Like, why are the Herd and McDonald Islands, which don't export to the United States and are quite literally inhabited by penguins, why do they face a 10% tariffs? Did you use AI to generate this?
No, the idea, look, the idea is.
Why
that
are they on the
countries
list?
Left off. Because the idea, what happens is if you leave anything off the list, the countries that try to basically arbitrage America go through those countries to us. Any country, like we had tariffs.
Sheesh, that's genius. I was sitting there wondering the same thing as like all these impoverished countries, like kind of the middleman countries that we don't exactly have a trade deficit with. Why are they included on here? And it's because they're like party hopper countries. If they don't have any tariffs on them, then anyone who's getting taxed by the US is just going to start to go through those countries instead. And I think that's what's really happening in Vietnam. Now that I'm thinking about it, the fuck is Vietnam making for us with cheap manufacturing? It's probably something to do with other countries that are getting taxed way more, sending their goods through Vietnamese manufacturers. Oh shit. Huh. Guys, I don't pretend to sit here and know everything. Like I'm really realizing a lot of this stuff in real time. And this is that's a pretty good point. Like great thinking on their part. I also think he's lying. They definitely used AI for a bunch of that, but like how much of it they used AI for, I have no idea.
The president put tariffs on China, right, in 2018. And then what China started doing is they started going through other countries to America.
Right.
They just built through other countries through America. And so the president knows that. He's tired of it, and he's going to fix that. So basically, he said, look, I can't let any part of the world be a place where China or other countries can ship through them. So he ended those loopholes, these ridiculous loopholes. And now what he's trying to say is, I'm going to fix the trade deficit of the United States of America. It's a national security issue. We need to make medicine. We need to make semiconductors. We need to make ships. We need to have steel and aluminum. Come on. We need the greatness of America to actually be built in America. And he's tired of getting ripped off by the rest of the world.
Okay, but just to be clear, April 9th, the so-called retaliatory tariffs, the reciprocal tariffs, I should say, are those coming? Or are they open to negotiation?
You see how her first thing was retaliatory tariffs. These are not retaliation. Reciprocal. Whatever you do to us, we're going to do to you. That's not retaliation. Retaliation is typically more excessive. It's like, all right, say that to me one more time. I'm going to go punch you in the face. It's words versus inaction. That's retaliation. They took one of your soldiers. We're going to go take 5 of theirs. Retaliation. So that's revenge. It's like revenge versus justice. Justice is reciprocal. Eye for an eye. Right? This person has to be held to account. Revenge is, I don't give a fuck who's in the car. Everyone's getting got because they're around your vicinity. That's revenge. And so reciprocal versus retaliatory. And that's why even she kind of made a Freudian slip because the entire media is trying to paint this as some kind of retaliation against other countries, which actually makes these negotiations way harder when people see this as an attack, when people see this as in some kind of offensive move to fuck with the other side. This is not what that is. We're trying to be fair. And when you've been getting ripped off for a long time and you're trying to make things fair, the person ripping you off is gonna gaslight the shit out of you to make it seem like you're the bad guy. Like, how dare you find out that I'm ripping you off, motherfucker? It's like, yep, that's what we're at. So I'm actually, Howard Lutnick, I'm actually going to be looking a lot more into. I think this is pretty interesting. Scott Bessent, Treasury Secretary, has a whole thing with Tucker Carlson, which I actually think is really insightful. We're not going to get a chance to play that today. Maybe we'll play some clips tomorrow. And then let's end this with Ben Shapiro and the All In podcast talking about the Trump tariffs and going back and forth. And let's actually see what the two perspectives are. Not that Ben Shapiro is an economist by any stretch of the imagination. He just talks real fast. But let's see what his perspective is, and then we'll kind of chime in here in between.
I mean, and not to jump into the pile of rakes that is the tariff plan, but
Yes.
I think that the way that the tariff plan was rolled out is about as bad a rollout as you could do. The reason I say that is not just because of my disagreements on the actual policy. I'll either be right or I'll be wrong on that. But the way that it was rolled out with essentially kind of a surprise announcement, I don't mind a surprise announcement if what is then rolled out is not replete with sort of contradictory justifications, statistics that are labeled one thing but really are not that thing. And so it opens itself up to all sorts of critiques from every possible side of the aisle. If you want to make the argument, make the full scale, well thought argument, and then we can argue over whether it's true or not. But there's 4 or 5 different claims that are being simultaneously made about the tariffs. 1, they're going to raise revenue. 2, they're going to reshore. 3, that you are going to somehow rejigger the world trading system. Some of these are mutually exclusive. If you're going to reshore, you're not going to raise as much revenue, for example. Right? Those 2 things are mutually exclusive, and they're both being trotted out at the same exact time. If you're going to put out a giant chart that the president holds up that shows tariff rates plus unspecified, variable, then what I'd like to know is what the actual tariff rate is, as opposed to what the calculation seems to be, which was the trade deficit with a country divided into the imports to that country. That has nothing to do with the tariff rate. I mean, just technically speaking, it has literally nothing to do with the tariff rate. And so what that means is now you're boxed in logically. If President Trump wants to do a reciprocal tariff reduction, for example, how do you do that? Because he actually has used a statistic for the tariffs that have nothing to do with the tariff rate and are actually just trade deficits. So the only way to actually rectify that statistic is to have Madagascar buy a bunch of American product, for example, in order to get their quote unquote tariff rate down. That sort of stuff seems badly calibrated, even if you like the policy, for example.
All right, yeah. So let's see this.
Unless from a poker point of view, they spent many months declaring they're going to do tariffs, and everyone thought they were bluffing, and everyone said, "There's no way you're going to do tariffs." It's like someone in poker is saying, "I'm going to play every hand I get. I'm going to be crazy." You don't believe them, and they actually have to do it in order to get the negotiating leverage that they need to be able to negotiate trade deals ultimately, and they have.
This is why Friedberg is the only reason I watch this show still. Is like the voice of reason. It's like, why are they doing these tariffs, and like they don't make sense, and there's all these different tactics. So I explained to you guys the cascading effect of you're gonna make some revenue from the tariffs right now in the short term. In the long term, folks you're gonna onshore manufacturing, and then all of that revenue is going to fall back in the US economy. If Hyundai has to build a factory here, they have to hire 10,000 US workers. Those 10,000 US workers are going to get paid a salary here. They're going to pay taxes here. They're going to spend that money at the grocery store here. They're going to spend that money at the convenience store for gas and everything. And then you multiply that across hundreds of companies, and makes a significant difference in the overall production of this country by onshoring manufacturing. So there's a cascading effect. I really need you guys to kind of visualize this, where you're making a lot of money from the tariffs now, which is on top of all the revenue we're currently making. This is like money on top. This extra, hundreds of billions of dollars is how we're going to fund the government this year. But then on the other side is, as this becomes untenable for businesses, ideally we should see this shift move back. Now, because of how many people are trying to get in Trump's way, and how much, like the election, in like the midterm elections, and then the elections for Congress coming up, I think in 2026, this is going to be really huge. Like if the Republicans lose the House or the Senate, then a lot of this tariff policy is going to start to get stifled, and it's going to ruin this balance. Like, instead of these people letting this natural process play out, they're going to get in the way of this. These tenured politicians who are trying to go against Trump. And if they decide to make his life harder and decide to make this like trade policy way muddier, then it's not going to have the effect. It's going to ruin the entire process, and we're going to be at a very shitty place where we've turned a lot of our closest allies into enemies. And so this only works if it's allowed to work. And what we've seen from Trump's first presidency is he tried to do this in Trump 1, but he got stifled every step of the way. And so, very important. This is a transitory period. And I like Friedberg's point on this, which is like, he said that Trump said that we are going to implement these tariffs. If he doesn't do this, then the rest of the world is going to think that we're bluffing. And they're not going to take the rest of his threats or his deals seriously. And so he had to do these regardless. So there's kind of like multiple points here to pay attention
to. Look a little crazy, maybe. I mean, that's
your position, Friedberg? They're in the 4D chess, or?
I'm trying to rationalize one kind of rational reason for why
5.
This was free money. This was like the
rate.
Singular goal review on tariffs.
I think those like a Scott Besson quote, and this is one of my favorites. He said that the stock market crashing is a Mag 7 problem, not a MAGA problem. MAGA being like the average everyday American worker, meaning like the stock market crashing in the short term, unless you're retiring this year, it's not affecting the Main Street individual. It's really affecting the Mag 7 companies. And he's like, the stock market will crash, but what's really going to affect MAGA is going to, and this is like the Make America Great Again movement, the folks who are trying to revitalize the underlying infrastructure of this country, is these trade imbalances. Like that's real. And so they're going to fix this. It's going to be better for the average everyday American, but it might be in the short term bad for these stocks. So it's a Mag 7 problem, not a MAGA problem. Scott Besson's making it very hard to fucking hate on him. All right. You guys know I'm a big fan of sayings and phrases and shit that help you remember stuff. Scott Besson doing a pretty good job. Impacts, consequences, and risk of the Trump election. How the U.S. can thrive in a high tariff world. This
What is the thing that's going to draw people to the United States as opposed to looking to a rising competitor like a China?
Well, that's a great question. So what is that thing? What do you think that? That's a great question. What is that
comes to
thing?
mind. Yeah, I mean,
AI is the only possibility, which is why I think the AI regime inside the Trump administration is so deeply important. I also think this is why I'm warning about, the possibility that these sort of anti-free market forces that are related to tariffs aren't just related to tariffs in some quarters. This is where populism can kind of run out of control and start to actually turn against some of its tech masters in some of these cases. And so one of the things that I'm very concerned about is if I was talking with Danielle Smith, who's the premier of Alberta, the other day, and she was talking about the fact that Canada, like she's very conservative. Alberta tends to be a more conservative area of Canada. And she was talking about how if Mark Carney were to become prime minister of Canada instead of Pierre Poilievre, that he actually is eager for the tariff war because it allows him to reorient toward China and away from the United States. And there are countries that absolutely would love to do that. I mean, there's a case to be made that the EU would love an easy off-ramp with.
Mark Carney is a fucking clown. I'm going to throw this out there. All right. He's a complete fraud. He's a complete shill for the globalists. And then thinking that instead of fixing relations with your next door neighbor, so Canada, instead of Canada realizing that they can't rip off America forever and that they should probably make friends with us and reduce their tariff rates, like that doesn't make sense, but we should go and somehow make a partnership with America's #1 competitor that's all the way across the Pacific. And that somehow makes more sense to Canada. Canada deserves to be in the situation that they're in, which is a complete shithole, who's being subsidized by the US to a tune of $300 billion a year. As a reminder, when we offered very kindly to make Canada the 51st state of the US, everybody called Trump crazy because they were like, bro, what the hell is he talking about? Like, you're supposed to just sit there and like smile at the camera and just not do anything, not bump into the walls. So the way that conversation went is he went to Trudeau, they were having a dinner, and he said, we're going to cut off the $300 billion of subsidies to the Canada every year. And Trudeau says, you can't, because if you guys stop subsidizing us, then the Canadian economy will crash. Trump said, if you can't survive without the US subsidizing you to the tune of $300 billion a year, then maybe you guys should just become another state of the US. Very fucking valid point. And so they're an American welfare state. And instead of normalizing those relations and actually creating a free flow of services through both nations, they want to engage in the tariff war and then instead maybe go partner with China. I know Trudeau is a fucking moron. Poilievre, I liked him, but after realizing that he was a career politician too, they're all the same sides of the same coin. Mark Carney, I'm pretty sure, was the president of the EU at one point. And he was a horrible fucking president too. We used to watch Mark Carney speeches all the time when I was trading Forex on this channel. And I would just definitely say that Canada has a very obvious choice here, which is normalize relations with your next door neighbor, have a free flow of those natural resources like the refined oil, petroleum, and the liquefied natural gas deposits that are in Canada, which is their largest export. And let's do something collaborative. But we woke up the beast and now they want to act tough or whatever. Now, these people are fucking crazy. They're all going to fold once they realize on paper how shitty their economy is and the situation that they're actually in.
Russia and China, and use this as an excuse, as a way of reorienting back toward Russian oil, for example, and then Chinese markets, because that Chinese
These would
market
be
is
lower
enormous.
inputs, right? I mean, you have lower input costs, which
And a big-
makes
and a
life
huge market.
better
Yes.
for citizens. And citizens like cheap things. They like cheap oil in their cars, and they like cheap cars. They'll be bringing BYD cars.
They don't have to import cheap Russian oil. If we had a partnership with Canada, and Canada is a massive oil producing country, and so is the US. Canada actually refines oil for a bit cheaper than the US does. So if we can open up the refineries and create some collaborative trade where there's no tariffs on oil in between both countries, the energy prices will go down. And instead of us having to import cheap Saudi oil or cheap Venezuelan oil or cheap Russian oil, we could actually bring down the refining costs and the transportation costs and the overall supply chain costs here between both of our countries and actually reduce the energy costs. Like, what the fuck is going on? Like,
Cars
Exactly.
into Europe.
And the thing that I'm worried about is when I look at forget about Europe and forget about Canada for a second. The tariffs that kind of shocked me when I looked at that list were all the tariffs on the Southeast Asian countries.
yeah,
Right, all of those countries where
Yes.
where production has been shifting out of China to places like, for example, Vietnam or Cambodia. The production has been shifting to those places specifically because companies know
To go
that
after
the
China.
United States, yeah,
Exactly.
because the United States is going after China. Well, now, why exactly would you manufacture in Vietnam when Vietnam is going to be hit with a 46% tariff rate on the basis that we have?
look, you see that little smirk he just did where he's like, I just figured something out. Not gonna lie, I had that same exact reaction. I was like, why the fuck are we taxing the Southeast Asian countries? That manufacturing is gonna go to Bangladesh, it's gonna go to Sri Lanka, it's going to go to the Indian subcontinent instead of, let's say, Vietnam, Taiwan, Thailand, fucking who else did we sanction? A lot of people that we tariffed. The Howard Lutnick video that we just watched kind of just broke this down for me, though, is because China was getting taxed from day one. And so a lot of the manufacturing moved over there. But a lot of that manufacturing was Chinese manufacturing that was just using Vietnam as a kind of like third party to send stuff to the US for the low. And then anything that you want to import into China that has tariffs, you would just import it through Vietnam or somebody else. And so that's why maybe we have a trade imbalance for $120 billion or $108 billion with Vietnam. So it's like, it's not like we're taxing these smaller countries because we're taxing the smaller countries because the Chinese are that smart. They would just send all their Chinese companies over to Vietnam or Thailand and just export things to the US for a lower rate if we tax them only. It's a pretty smart strategy. It really takes somebody who knows the real, you gotta be street smart for this shit. Because you gotta know how your enemy's gonna react to certain actions. But now we know.
Have a 90.
It's more than that, Ben. It's like they've made those investments over the last 5 or 6 years. And so you have tens and hundreds of,
Yes.
millions of dollars, billions of dollars of sunk cost. Now, what do you do in that moment?
These were
Exactly.
specifically designed, Ben, to be a diversification strategy. Japan was paying their companies to build factories outside of
By the
China.
way-
And Apple was doing India, Vietnam to build AirPods and laptops, and even the iPhone being made outside of China. That diversification strategy
Jake, did you
is
watch
wiped
did you watch the presser yesterday? The worst part for me, I only had one moment where I was like, oh gosh, he stopped on Sri Lanka and he goes,
Uh-oh.
Sri Lanka. Good old Sri Lanka. 88%.
Chamath, amazing Sri Lankan, but Sri Lanka, very tough on us,
I was
not
like-
very
I was like, sir, I'm American.
accepting. Go ahead, Ben. You can do yours. You
I'm
can do your
American.
dueling about Sri Lanka. Just
Sri
do a
Lanka.
great Trump. Okay. And that's
Sri
the
Lanka.
reason why Ben Shapiro's podcast number 2 to All In now, because of the Ben Shapiro Trump impersonation. Ben Shapiro, great American. Have you been to the White House?
I have actually. Yeah.
You
I was
have.
there-
Have you
there a
been
couple weeks
invited
ago.
in this? Or are you still
I'm not.
anti-Trump or
I've not
never
been.
Trumper? He was a nasty never Trumper. Now he's pro-Trump.
Exactly.
around.
I had the same exact trajectory as JD Vance, except I didn't end up vice president of the United States. But I think that that again, when we talk about the rollout, the fact that, for example, the meme online right now, and I know we all kind of live in meme world, that the meme is the president and JD Vance lecturing a penguin because on that.
Yes.
No, Ben, we don't all fucking live in meme world. No, I live in Virginia, right? I live in Virginia. I have to go to the grocery store. Ben, we trade financial markets. We don't live in fucking meme world. Yo, it's getting mad late, bro. I'm about to start roasting Ben Shapiro for shit that has nothing to do with markets. All right. I'm going to get myself in a lot of trouble. And there's no reason to do that because this channel is doing great. And so are all of you. Ladies and gentlemen, happy and safe trading this week. We've got a quick glimpse at what at what different key players think about the tariff wars. And I think the main takeaway is they're trying to bring manufacturing back. They're trying to make it expensive for folks to build outside the US and try to sell to us. If you want to sell to Americans, you got to make that shit here because at least when you're taking money away from Americans, you're at least giving money back to Americans through jobs and through the manufacturing here onshore. And so I think it's a very straightforward strategy. There's the cascading effect that we talked about. In terms of trading markets, we have a little bit lower to go in terms of the stock market and for cryptos. Make sure to take advantage of these low prices. If these are discounted prices in the market, you don't get these chances often. We're at a very low point for cryptos and for stocks. They will not stay down here forever. And excuse me, a lot of people only pay attention to these markets when they're pumping. When Bitcoin's price goes back up to 100, everyone's going to be like, oh shit, I wish I bought it lower. And guess what? This is your opportunity, not financial advice, obviously, but you can't get rich during the high times. You can only get rich during the low times because what you buy during the low times becomes your exit during the high times. So I guess like you can get rich in the high time by selling out, but only from what you bought and the decisions you made during the low periods. So if you guys are looking at, waiting for the market to rebound in order to get some kind of confidence to get in, you're going to be too late. You're going to be somebody else's exit liquidity. If you want to buy, if you're going to wait till Bitcoin goes back up to 90, the people that bought it at 79 and the people are going to buy it at 70 once it drops, you're going to be there. You're going to be my exit liquidity. And I don't want you guys to be there because you fucking know. I'm telling you right now. Most people just don't know. All right. So dollar cost averaging, do your research on that. Chart Addicts members, I'm actually going to be dropping. Maybe we'll do this together because I know I've said this before, but that the market has very graciously given us a second dip. Is that I'll create a new portfolio and I'll invest this thing from scratch with all of you guys. On top of my regular portfolio, I'll put that to the side, invest that personally. But maybe I'll create an account and show you guys the journey. We can kind of take this journey together of building during these like dips of kind of like finding some, let's say some smaller valued, we call meme coins, and then using this dip right now. And then as soon as the market rebounds, those meme coins kind of see a big surge. We transition those coins over to medium tier, what we call tier 2 coins like Solana and the rest. And then those tier 2 coins can kind of become the tier 1 coins. We can transfer those over and convert those whenever the balance is right into Bitcoin, Ethereum, and the rest. Okay. So maybe we can do this together. If you're a Chart Addicts member, keep an eye out. We'll talk about this more tomorrow before the market stream. So we'll be doing a pre-market members only stream tomorrow. And then maybe we'll go live for about 45 minutes. But if you guys want to be part of those live trading streams, make sure to register as a member, sign up for the masterclass, and we'll see you guys there. All right. Drop a like on YouTube if you guys are watching. To everybody else, happy and safe trading. I'll catch you guys tomorrow.